Hi everyone. This is the study done by University of Chicago where they studied how the stock moves, and it was found that the actual causes of price movement of a stock is dependent on 49% by the sector. That is, if the sector is good, the stock moves, and 31% the stock movement is due to the market environment, and only 20% of the stock movement is attributed to the fundamental value of the company or its technical valuations. But what happens in reality? In reality, the typical resource allocation is 80% for the stock. That is, we spend around 80% of our time studying about the company and studying about its fundamental values, while we don't give any importance to the sector and market. We spend only around 10% to study about the sector and market. And I will also show you another study done by Weisenberg. Here you can see the investor who invested based on sector timing performed fantastically well when compared to other two strategies. The other strategies are market timing, which performed much better when compared to the buy and hold strategy, but performed poorer to the sector timing. So by now you would have understood how important it is to time the sector properly. Identifying the sector leaders is one of the most underrated issue in stock market trading, and in this video I will be discussing about how to identify strong sectors in this weak market. The broader market Nifty 50 is well below 50 DMA, and you in the last week you would have seen how the Nifty fall off from its recent peak. So for identifying this sector rotation or the top 3 sectors, we are going to use relative strength indicator, and we will also be using a combination with 50 DMA and all-time high zones. So at the end of the video, you will be knowing what is relative strength and how to plot it in TradingView, and how to find the sector rotation and strongest sector easily, and to identify the strength pockets in current market environment. And I will also be teaching or telling you my top 3 strongest sectors as of today, and sectors that are showing turnaround signs will also be discussed so that you can use it in your future reference. I will also shed my light on which sectors should be completely avoided, and I will also be talking about a little bit on the current market structure and what to expect in the coming days. So kindly stay with me till the end of this video. And as I said, relative strength is a perfect tool to identify the sector strength. Relative strength is completely different from RSI indicator, which is commonly used by traders. RSI indicator compares the average gains of a stock to the average losses of the same stock over a specified look back period. The look back period is usually 14 periods or 14 days. While in relative strength, it compares the strength of a particular stock or a sector in relation to a broader benchmark. The broader benchmark may either be Nifty 50 or it can be Nifty 500. So to be more easy to understand, RSI indicator compares the strength of Maruti Suzuki today versus Maruti Suzuki 14 days back. While in case of relative strength indicator we are discussing now, we compare the performance of Maruti Suzuki in relation to the Nifty 50 or Nifty 500 according to our benchmark. So the relative strength is calculated by dividing the price of the stock versus or divided by price of Nifty 50 on a daily basis and smoothened with a moving average. The line you are seeing is the relative strength line, and you can see the zero line which is plotted over here. If the value is above 0, it means the sector or the stock is strong, and if the value is below 0, like this you see, the value lies below the 0 line, it means the sector or the stock is weaker. And this line is nothing but the moving average, smoothened moving average. The value can either be 60, 120 or 200 according to which strategy you follow. Usually I follow 200-day moving average, but for this purpose I will be showing a different moving average which I will be discussing in next slides. So how to plot relative strength in TradingView? For that I am going to open tradingview.com, and you can see I will open CNX 500, that is Nifty 500. In this, go to indicators section and type Mansfield relative strength indicator. This is the same indicator which Stan Weinstein uses in his trading strategy. I had made a video on Stan Weinstein strategies. You can go through it in my playlist. And this indicator was published by the author or the developer Ostap Chester. Just click on it and it will open it in the down panel. Now click on the settings, and in that setting what you have to do is first you have to change the index. Why you are changing the index? Because we are going to compare according to our Indian market. So the broader market I am going to use is Nifty 50. You can also use Nifty 500 also. And then I am going to deselect sector and industry, because today we are going to compare our stock or sector with the index only, with the broader market index only. So do that. So you will get a single line plotted over here, and I am going to change the color of the line to a darker shade so that you can see it clearly. And in the input section I am going to change the moving average to 66 instead of using 200 moving average. Why it is so, I will be explaining it in a bit. Please stay with me. So once it is over, just click OK and you can see the relative strength indicator plotted. What it shows, the CNH 500, that is Nifty 500, is performing poor when compared to the Nifty 50 as of today. I will expand this section. You can see the Nifty 500 is minus 0.2 value. So the Nifty 500 is plotted below the zero line. Each point is nothing but the average of 63 trading days prior. So this point is nothing but the 0.02 minus 0.02 you are seeing is nothing but the moving average of 63 days prior. This is calculated by dividing the price of the Nifty 500 divided by Nifty 50. Okay. Hope this point is clear. If it is not clear, don't worry. Just rewatch the section and you will be able to understand it easily. So why I selected 66-day relative strength? Usually I use 200-day, but for this section we are going to use 66-day. Why it is so? It is because, let me zoom the chart. This is chart of Nifty 50. You can see the Nifty 50 is trading well below the 50-day moving average. It made a low on April 7, 2025, then rallied and made a recent high on June 27, 2025. From June 27, 2025, the stock market or the broader market is in a consolidation mode. It has not gone anywhere. Okay. So from this period to this period, the stock market, that is the Nifty 50, hasn't moved anywhere. So we are going to check the sector which has moved significantly in these days relative to the Nifty 50. That is, we are going to look for the sectors that has performed in the past 66 days. That is why we use the RS of 66 day. Hope this point will also be clear. Now first we are going to see which are the strongest sectors. Okay, I am going to show you the sector stocks which are strongest as of today. My first pick is metal index. Why metal index? Can you see this is strongest to me, not only based on relative strength. You can see the relative strength line is above the zero line and it has moved. I will zoom it. If you see the Nifty, the relative strength line has moved consistently up in these past 66 days. That is what it is showing, and it is well above the zero line. Also, the second point to be noted is the sector itself is trading above the 50-day moving average. While Nifty 50 is below 50-day moving average, you can see the sector is trading well above the 50-day moving average. Even in weak markets, this sector is showing tremendous strength by trading above the 50-day moving average. Also, the next point is this is trading near to the all-time high zone. While Nifty 50 is struggling to make any all-time highs, here there is a sector which is making all-time high zone at this point of time. So this sector is very strong to me, the metal sector. You can definitely consider this into your watch list. And the second sector I am considering is auto. It is also based on the same three criteria. You can see the relative strength line is above the zero line. It is in positive zone. The sector itself is trading above the 50-day moving average, and the price is very close to the all-time high zone. So the stock is taking a resistance from the all-time high zone. It may come down and then again it may go up. The third sector I'm going to show you today is PSU banks. The banks are showing tremendous strength when compared to the recent times. You can see the RS line is above the zero line. It is in positive zone. Relative strength is good when compared to Nifty 50 for the past 66 days, and the sector is trading above the 50-day moving average. These two criteria are met, while though it is away from the all-time high zone, it is trying to go near the all-time high zone. So it is trading very close to the all-time high zone. So according to me, this sector is also strong. So now I am going to show you two sectors that are showing turnaround sectors. First one is Nifty Finance or CNX Finance. You can see this is in close relation with PSU banks, right? When banks are performing good, usually finance and private banks should also perform good. This you can see here. This is the negative divergence, what you are seeing here with the relative strength. This is one important concept. I will make a separate video on this divergence concept. You can see the relative strength line is increasing and slowly turning into positive zone while the price is falling. What it shows is when the price is falling, it is falling very less when compared to that of the Nifty 50. Nifty 50 is falling 5%, means CNH Finance is falling only 2 to 3%. This is an arbitrary, for example purpose I am saying. This is not the exact percentage fall I am talking about. If the Nifty 50 has fallen in this zone 5 to 6%, this Nifty Finance fall would be less than 5 to 6%. That's why the relative strength line is higher for Nifty Finance. Similarly, another sector that is showing signs of strength is nothing but Bank Nifty. You can see in Bank Nifty the same relative strength divergence is there. It's obvious, right? When PSU public sector banks are doing good, it is obvious that Bank Nifty will also do good, right? So the sister sectors are also doing great, like finance and Bank Nifty. So it is a confirmation that PSU banks are bound to move in the coming days or months. Now I will be showing the sectors which are having negative relative strengths, and these sectors should be avoided completely as of now. What are the sectors? The first is CNX Pharma. You can see the CNX Pharma for me as gap down below the 50 DMA 3 to 4 days back, which is very dangerous to me because I don't like when a sector gaps down below the 50 DMA. Usually when it gaps down below 50 DMA with negative RS line, you can see the RS line is trending down for quite some time, and now it has entered completely into the negative zone. When it happens, it is possible for the stock to go further down before it finds a base and then moves up. So this sector as of now we need not give any importance to it, and this can be confirmed by looking into the sister sector. What is its sister sector? Pharma and healthcare. You can see Nifty Healthcare. This also had a recent gap down below the 50 DMA. The same performance. The relative strength line is trending downwards for the past 66 days, and now it has entered into the negative zone. So Nifty Realty sector is below 50 DMA. Can you see? The sector is below the 50 DMA. Relative strength line is in negative zone, and it is far away from its all-time high. All-time high is here while the stock is trading here. So it is a definite no-no. This is in complete opposite with the strongest sector. In strongest sector, you will see sector will be above 50 DMA, RS will be in positive zone, and it will be close to the all-time high zone, while this is a reverse of what we saw in the auto, metal sectors and PSU bank sectors. So next is CNX IT. You would have been bored or tired of hearing this. IT has underperformed consistently for the past 1 year or so, and you can see how the RS is in negative zone. The stock is trading below 50 DMA and it is trading well far away from the all-time high zone. Can you see? Quite some days back, there was a gap down below the 50 DMA. Here again, there is a gap down below the 50 DMA, which is never a good sign for a sector. So completely avoid them. So where are we heading now? What is the next pointer? What we should look in the broader market? See, this is the chart of Nifty 50 I am pulling out. You can see Nifty in short term, there is worry because the Nifty 50 is trading below the 50 DMA. It is possible for the Nifty 50 in short term can come down, and then it can even break this pivot for quite some time and then start rallying up. But intermediary and long term, we are fine because this is nothing but a small cup and handle that is getting formed. This handle can vary because now the line I have drawn is like this. This can even slant a little because the index can come here and then make a rally over here and then consolidate for some time and then eventually can break out into all-time high zone. So don't hear any negative news flows because intermediary and long term we are still fine. We are actually forming a very good base according to the structure today. Short term there is worry. So if you are a swing trader, you should be patient. Don't jump into the position immediately. Even if the stock starts breaking out, wait for the stock to close at the highest point of the day. Means wait for the stock to close at the high point. Okay, most of the stocks nowadays are squatting. I had even posted recently I posted in my YouTube community page where the stocks are squatting a lot. Okay, when there are more squats, it means the stocks are not strong. The stock market is not strong. That is what it implies. Wait for follow through days. Once your alert gets triggered, you keep them in a separate watch list and wait for the stocks to perform. If you wait for it, after 2 to 3 days, you can enter into the new alerts that is getting triggered. Instead of entering into the stock on the same day of the alert triggered, you can wait for a few days and enter into the new alerts that are getting triggered. So look for follow through days and prepare your watch list in these times so that you are ready when the stock breaks out. Because based on your strong sectors, what we discussed, metal, PSU banks and auto, you can prepare your watch list. Look for stronger structures that is getting formed, either a VCP pattern or a high tight flag pattern, or it can be stage 4 Weinstein pattern in daily time frame, or you can look for a cup and handle pattern, whichever you are comfortable with. You look for the stocks that are showing these structures and add them in your watch list. Wait for the right time. Why? Because the stronger stocks in strong sectors breaks out first before the sector itself. Sometimes the sector might not break out, but before the breakout of the sector, the strongest stock in the sector would have already broken out. By the time everybody is looking into the hot sectors, the strongest stocks in that sectors would have already moved up a lot. So make sure that you are doing your homework. So that's it for today, guys. I hope you would have understand how to identify sector rotation using relative strength. Relative strength is a wonderful indicator. I will be making some more videos on relative strength in the coming times if there is enough interest. I would want you to like, subscribe and share my YouTube channel if you feel that I am providing value to you. Thank you guys. See you soon.